Hi, welcome to CPA Mama. I am Leanna and I'm a licensed CPA in the state of California. Today we'll be discussing the basics of payroll tax deductions. So when you receive your pay stub, you probably notice that you have your gross wages and then maybe a few lines of various tax deductions, and then this comes out to your overall net income. So today I thought we would discuss just kind of the very basics of what's being deducted, why, and if you'll ever be getting any of that money back. So the first line item we're going to discuss is Social Security tax. For every individual, you are responsible for 12.4% of your wages on Social Security. As an employee, your employer covers half of this. So if you look at your pay stub, 6.2% of your wages goes to Social Security and your employer covers the other 6.2%. For 2022, the max income is $147,000, which comes out to $9,114. This means that your wages up to $147,000 can be taxed at 6.2%, and anything above that will not be taxed for Social Security. So your personal responsibility can't be more than $9,114 as a W-2 employee. The next line item we're going to discuss is Medicare tax. This comes out to 2.9% per person, which, just like Social Security, is covered 1/2 by your employer. So you are taxed for 1.45%. Unlike Social Security, there is no income limit, so you'll be taxed at 1.45% of your wages, no matter how high they are. However, there is an additional tax called additional Medicare tax, which is taxed at 0.9% of your wages on anything above $200,000 for single filers and $250,000 for married filing joint filers. This means if you are a married individual and you make $300,000, all $300,000 of that is going to be taxed at 1.45% for the base, and then everything above $250,000, which is $50,000 in this situation, would be taxed at 0.9%. Depending on what state you're in, there may be other various state taxes. For California, we have SDI, which is State Disability Insurance. This comes out to 1.1% of your wages, which in 2022 is capped at $145,600. This means that the most that you could be paying for SDI in California for 2022 is $1,601.60. So now let's get to the more variable tax withholding, which is your federal income tax withholding and your state income tax withholding. This is entirely based off of how you filled out your W-4, which is usually filled out right when you start your position, but you can update it annually with your employer. This is kind of a broad strokes explanation of your income within your household, letting your payroll department know what kind of withholding you should get. Maybe you have a spouse who is also employed, or maybe you have a second job that gives you additional income. You should all report all of this on your W-4 so your payroll department knows what tax bracket you might be in and can withhold the appropriate amount for your withholding. I think a big misconception with the income tax specifically being withheld on payroll is that people think that since they filled out a W-4 and that amount is being withheld on their payroll, that's their actual tax. Your payroll department is not your CPA. They're not doing your actual tax return. They're just giving a good estimate based on the information they have about you as far as what you might owe in tax. So one thing I will say about your payroll department, they can only estimate your tax obligation to their best ability based on how you fill out your W-4. I am always surprised when my husband tells me of coworkers who tell him that he should just increase his exemptions listed on his W-4 and his taxes will go down. that doesn't actually decrease your taxes. It only decreases the amount of withholding that your payroll department takes out. Those people are going to be super pissed off when they file their next year's tax return and find out that they owe basically a shit ton of taxes. As far as what taxes you'll be getting back versus ones that you will not, Social Security, I guess technically you're going to be getting back when you're retired and receiving Social Security payments, but you're not going to be getting this back on your tax return. Same with Medicare. Technically you'll be getting the benefit when you reach Medicare age, but you're not going to be getting this back unless you are in a specific situation where you're a high earner and that additional Medicare tax was too high. As far as SDI, if you're in California or other states that have SDI, you'll only technically be getting this back if you file for disability insurance. Myself, I went on medical leave for both of my children, so I did receive the benefit from this somewhat. As far as the withholding that you actually might get back, this would be for your federal and state withholding. If you're over withheld, then when you file your tax returns, the difference of what you paid through payroll versus what you actually owe for IRS, that would be a refund on your next year's tax return. Additional deductions that you'll see on your payroll include retirement, if you've opted in for retirement, as well as if your employer requires any kick-in for your health insurance or life insurance, as well as if you participate in dependent care FSI. So one thing I will say about the whole payroll thing is most people are employed through a W-2 or payroll withholding. So it kind of blows my mind that I've taken probably 3 or 4 classes in my life on Roman history, but I've never had to take a class on the basics of, hey, one day you might be employed and you'll need to fill out a W-4. How do you fill that out? Or you're gonna have a pay stub, and let's just explain to these kids how those line items are calculated. But hopefully you're educating yourself now as adults through YouTube and through the IRS website, which actually is quite helpful. So thank you for watching CPA Mama. Please click like and subscribe, and feel free to leave some notes in the comment section if you have a specific topic that you'd like me to cover.